I came across this one candle scalping strategy where two successful YouTubers had almost identical YouTube scripts and titles and thumbnails and claims, and they had traded it for over 20 years and they will use it for all their life. Does anybody smell anything? I got to test that, right? The strategy is this. It uses the first candle of a market session. They didn't say which one, so here we're just going to look at London. You wait for the first 15-minute candle to close. I'll rewind this so it's easier to find. You then move to the daily chart and you use the ATR, average true range, and you check the value, 0.467. Let me write that down. You then move back to the 15 minutes. You mark the top of the candle, the high, and the low of the candle. You then subtract one price from the other. I know there's maths involved in this. You take the average true range on the day at 0.467, divide that by 4, which is 25%. That equals 0.011675. You then have the high, you minus the low, which gives us 0.131. And if 0.131 is greater than 0.011675, we have it. That's what they call a manipulation candle. If it isn't, you move on, you do not trade it. That's a golden rule. If that manipulation candle is green, we're looking for a short. And if the manipulation candle is red, we're looking for a long. Keep your mind on that. We then move to the 5-minute chart. What we're looking for is a break above that first candle, which has clearly happened. But we're looking for two specific conditions depending on whether we're going long or short. For going long, we're looking for a hammer or a bullish engulfing candle. Going short, we're looking for an inverted hammer or a bearish engulfing candle. Engulfing means that this candle's body engulfs the body of the candle prior. That condition has to happen within this 90 minutes. And the 90 minutes starts from the beginning of the opening candle. So once that candle closes, there's only 75 minutes left. And there was your entry. Can you see it? A bearish engulfing candle. And that would be your entry here. And your profit target would be the bottom of this range in white here. And we got stopped out because what this strategy has are very tight stops because it was built for the stock market and Forex. So the stop loss would have been just here. And as you can see, we got stopped out. Not a winning trade. So those are the rules. I won't bore you showing you the opposite setup for a long. It's identical, but in reverse. So the philosophy is this. It's a liquidity hunt. The opening move traps weak positions. Smart money reverses the trap. Counter direction entries. So I had an issue here. We're crypto, and crypto is 24/7. So I ran 4 tests. Crypto 24/7. Asia, New York, London, Monday to Friday session opening candle only. Let's run the code and find out. Now I've turned off the simulator, the trading simulator, because this is all about the first candle of the day. If you're not there, you don't trade. Simple as that. Let's go. We have a trade. You don't get many. Or losing trades, one not all losing so far. Oh, a winning trade, another winning trade, another winning trade. Ooh, a big winning trade. So is this strategy finally accepting the market? Or is it just enough luck to keep you gambling before you get wrecked? So here are the results. The backtester went from November 25th, 2025 to December 27th, 2025. Yep, I'm working over Christmas. Here are the 4 results, starting with the crypto 24/7. Ouch, 5.9%, down $70 at the end, not a good start. Let's see if the Asian market can improve on that. No, 4.5, down about the same 932. Come on, New York, we need some help. 27.3%. Break even though, 11 trades, it was that 6% profit and they only minus 1.55% loss because the stops are so short. Last but not least, come on London. Ooh, 27.8% win rate, 18 trades, 1,037. London was the best achiever. You're welcome. But over that same period, PulseFlow got a 70.8% win rate. So what's the issue with this strategy when it comes to crypto? The stops are just too tight. They have their stops at the top of the candle before. the high of the candle or the low of the candle before. Maybe a little gap sometimes, I saw in their video. That doesn't work in crypto. But there's a bigger problem. I even tested it with 1%, 2%, 3%, 4% stop loss on all the sessions, and the results were about the same. Do you know why? Let's look at a couple of trades to see. This was a winning trade. It actually worked. Engulfing candle, nice profit, got out. No problem. But now let's look at TST USDT. It got an engulfing candle here and is going long. And it's going long because the 15-minute candle that formed the range at the start of the London session was red. So now it's looking to go beneath that candle and then come back up. And on the 5-minute, you get that bullish engulfing candle. And you instantly get stopped out. Like instantly in the next candle. Because the stop is literally at the bottom of that engulfing candle. It's crazy. However, there is another problem. Let's look at the overall market direction. As I've told you in PulseFlow, we use the 4-hour EMA 50 and EMA 200. If the EMA 50 in blue is beneath the EMA 200 in yellow, we go shorts only for this particular coin. And the opposite, if the EMA 50 is above the EMA 200, we go long. And if you want to see if I'm correct here with using this technique, what do you think now? We're definitely in a downtrend. So why would you be risking going long with such tight stops? Crazy! But let's bring it back to PulseFlow. This was that losing trade, TST, on the 1st of December, 8:45 AM UTC. And now let's go to the PulseFlow results. Same coin, around the same day and the couple of days after and one day before, we had it come into 5 different strategies, all bearish because we're in a downtrend. And look at the profit, 12%, 7, 6, 6, 4%. You can see it here within PulseFlow, a 5% stop. That's more sensible, right? It's in a downtrend. It's a mid-tier cap. Volume is okay. It's steady and balanced with its market dynamics. An 88.9% confidence rate based on previous trading history. So the simple fact is, market context matters. Crypto volatility will crush you if you try use a Forex or a stock market strategy like this. So I'm afraid this is yet another TA not for crypto. So this strategy, pushed by 2 completely separate people as if they made it up, may be successful in stock market and Forex. I have no idea. But if you're wanting to trade crypto, please, please, please be careful what you adopt as your trading strategy when you watch YouTubers. Don't trust claims, particularly when 2 people say they came up with it, they've been trading it for 20 years, and they'll use it all their lives. So test everything for yourselves. Or if you see a YouTube video and you have some doubts, drop me a comment and I'll test it for you. So please subscribe, like and share, and I'll see you in the next TA Busters.